Welcome back to another episode of Cashing Out. I'm your host, Billy Alvaro, my co-host, handsome cousin, Wayne Hartart. We are Easy Sell Property Solutions. We're located right over here in Holbrook, Long Island. We are Long Island's #1 all-cash house buyer. You can find us online at easysell411.com or by phone 631-400-EASY. And, of course, you can find us on Facebook at easysell411. Go on there and like us. Like that page.
Smash the like. Huh?
Smash the like on Facebook. So, interesting today. We have another special guest with us. This is Mr. Rick Haberman from the Rock East Group. Rick, how you doing today?
Good. How are you?
Doing phenomenal. Rick is an outstanding individual. I've been using Rick for a while on and off for doing some of our purchases of the properties that we buy. And the reason why I have you on today is I want to give the audience out there an understanding of the differences between an all-cash house buyer and then guys who kind of use their friends and family money, and then where you come in, the private lender, and then, of course, the last piece, which is like Fannie Mae, Freddie Mac, which you never want to use because they're the absolute worst to get a mortgage with. So why don't you tell us just, the name of your company, what you guys do, how long you've been in business, and then we'll start asking some questions.
All right, sure. Rock East Group, we're a family-owned business. So we're true family-owned. It's myself and my two brothers and my father.
I met all of your brothers except for the one, Michael.
Yeah, Michael came in later. He just joined in June or July from the corporate world.
Cool.
So he was tired of dressing up in a suit, heading down to Manhattan every day. And I guess maybe he saw a little bit about how my brother and I didn't have to get dressed up.
Yeah, these guys have the lifestyle. This is how they go to work. They hang out every day.
And he decided to make the change, and his wife was behind him, and he did it, and he's been doing well.
Awesome.
So he's helped expand us up into the Rockland area, Orange County, Mount Vernon.
So he's going upstate.
Yeah, because he lives up in Westchester.
Beautiful.
So we never really had a footprint there, and so he's starting to expand that.
So you're a pilot also, aren't you?
I am a pilot.
Like a full-time pilot.
I'm a pilot for a major airline, yes.
Awesome. Very cool. Very cool. And so you guys only fly a couple of days a week, I'm assuming?
Yeah, my schedule allows me to work on the real estate probably 90% of the time. Yeah.
Awesome.
So
let me ask you this. I know the name of the group is Rock East Group. It's rockeastgroup.com.
Correct.
Right? www.rockeastgroup.com. So let me ask you the difference between your company and let's go into an all-cash buyer, because we have a lot of people that were listening out there that, they want to cash off from their house. So what's the difference between a real true cash buyer where they're using their own money versus the Rock East Group? What are the small differences there?
Well, I mean, a cash buyer is someone who is obviously just buying the house all cash.
Their own cash,
Their
usually.
own cash. Yeah. Whether they're borrowing it from a friend or not, I don't know, but they're coming in all cash, need no financing, and can come to the table, close, maybe not require some of the documents or appraisals that we might need. So they're just coming in saying all cash. Now, I will say that a lot of our clients are all cash buyers too, and they'll put down as their contract.
That they're cash.
That they're cash, but then they'll work behind the scenes to get the financing, and that's where we come in.
Gotcha. Yeah. So people out there listening, if it is an all cash offer, the two things we always tell them to look at when we're buying cash is we usually give them a bank statement to prove that we actually have the cash in our account, that we're going to close with our cash and there's no contingencies, right? Mm-hmm. So with people who are going through the Rock East Group, even though they are saying it's cash, you do have underwriting criteria, right, where you have to get the deal approved?
Correct. We do.
Talk about that a little bit.
So what we do is from the start process, we'll send out an application to a potential client. The application is, very basic. It's just a little bit about yourself, a little bit about your assets, a little bit about your liabilities.
Is it as strict as the Fannie Mae application?
No, not at all. We don't ask for any supporting documentation. We don't ask for bank statements. We don't ask for tax returns.
Are you running a credit report?
We do run a credit report.
What do you look for in that?
We look from minimum of 620.
Okay, so it is a little bit of credit driven.
A little bit of credit driven, and we're also looking for investors who have some experience in the investing in real estate.
A little bit of a track. Yeah, so
a little bit of a track record. A little bit of, they might have some rental properties that they own. They might have done one or two flips in the past. We'll also work with maybe someone who hasn't flipped in the past, but is a real estate agent, is an appraiser, is it a contractor who's been doing it for other people and knows the business and can get properties, and now they say, why not just do it for myself?
Sure.
So we do work with
newbies.
Newbies also.
So let's get into, and we have a lot that we want to cover. On the newbie side, what are the risks with somebody who they haven't really done a flip yet? They want to come in and do a flip. Like, what are your concerns with somebody like that? Even though they might be a realtor, they might be an appraiser, they might understand the industry, but they've never actually been an operator in renovating these properties. What are your concerns? What do you look for, and how do you protect yourself?
Well, protect ourselves first is that our advance rates are typically not as aggressive as it would be for an experienced investor.
So just briefly touch on that advance rate, because there's a lot of people who are not going to understand what you're saying.
Okay, so what we'll do is if it's a new investor, we might only advance 70 to 80% of the purchase price and 70 to 80% of the renovation costs.
So what that would mean is the guy who's borrowing the money has to come in with 20 to 30% of his own cash.
Correct.
Okay.
Plus his closing costs.
Plus his closing, and plus monthly payments to you.
Plus monthly payments to us.
Okay.
Right. You get billed every month for outstanding balances.
So just like a regular mortgage company would send you a mortgage statement, you have to make the payment.
Correct.
Interest only?
Interest only, correct.
Okay.
Interest only. It's done by a third-party servicer that we have out of California. So some of the pitfalls are what I typically see if we have a new person is they typically run into problems with their contractor.
Even when they're seasoned, they have issues
Even
with
when
the
they're
contract.
seasoned.
How do you not
okay?
laugh at that one?
Yeah.
They run into where they think that, they have a good contractor, comes recommended, and the contractor's not moving them. They don't know how to push their buttons.
Yeah.
Maybe they've given too much of the money up front,
Oh,
Yeah,
boy.
and
we
the
made those
contractor
newbie mistakes.
disappears. So
Years ago. Oh.
we've seen that, but with the new people that we've worked on, it's they've been getting themselves, the project finished and selling.
So have you found with a lot of these newbies that they're underestimating the amount it costs to actually get the repairs done?
Absolutely.
Yeah. So that's
absolutely.
And are you also finding, along with that, because these are the two issues that we've always come across with newbies who come to us, they generally undercut or their repair costs are not nearly what they think they're going to be, and they overshoot on the ARV, on what it's going to sell for.
Of course.
Are you finding that as well?
We're finding that as well, of course.
So to protect yourself on the after repair value, the resale, you're getting an appraisal done.
We do get an appraisal on every deal that we do. Good. Exactly.
And is the deal to have the guy borrow the money, is it contingent upon what that appraisal comes in at?
It is. It might be our advance rate and how much I can lend will be dependent on the appraisal.
Okay. So that's a good point. So what I want to touch on is in our thing, because the radio show, it's all based on us buying properties for cash. And there are never a mortgage contingency. There's never an appraisal contingency. But what the sellers of homes out there need to realize is if somebody's coming in, and this is nothing bad about private lenders, but they just need to be educated. If somebody's coming in and they're saying it's a cash deal, you want to ask them, are you going to get financing from anybody? Mm-hmm. Because if they are getting financing, there could be an issue if the appraisal does come in light, where the private money bank will still allow you to borrow the money, but they're not going to advance enough, all of it, right. Which means you're going to have to come out of pocket with money. And if that buyer doesn't have the money himself, the deal can blow up.
Correct.
So I just want people out there to be aware that that's, it's a real issue. Appraisal issues and appraisal contingencies with private lenders is they have to take that into consideration.
Absolutely.
Of course.
Yeah.
So, and the appraisal will, like I said, will depend on how much we will give. But then you have to look at it as, does the deal make sense?
Well,
okay,
right.
Because if the investor thinks the property is worth X and it comes in at Y, when you're borrowing from private money, there are costs involved.
Sure.
Sure. Suppose if it's just your own money. We record every mortgage. Okay, so in New York, there's mortgage recording tax, there's recording fees, there's an attorney fee.
Yep.
Quite a few
you have
fees.
to
Attorney
pay
fee
appraisal.
for the private lender and for the guy who's buying the property.
Of course.
Yeah.
Of course. So there's we require insurance.
Property insurance.
Property insurance that
Right.
has
Plus
to be
you have title insurance on the house.
The title insurance, and those aren't fees that Rock East Group is charging you. That's just
New
doing
York State
business in New
standard.
York,
Cost
New
of
York
doing
State.
business just for this.
Cost of business. You know, the recording fees in Suffolk County have gone way up over the last
Oh,
year.
my
I've
God.
seen that.
You know, so all
Huge,
that. So all
huge.
that. How much time is it going to take you? We average. We look at it and we figure it takes about 8 months on average.
All right, so we're on with Rick Haberman from the Rock East Group, rockeastgroup.com. This is Billy Alvaro, Wayne Hartart. We are Easy Sell Property Solutions. You can find us online at easysell411.com or by phone 631-400-EASY. Today we're speaking to Rick from the Rock East, and we're talking about private lending and the differences between all cash and going through a private lender if you're going to get a cash offer on your property. We'll be right back right after these messages.